Hello traders, the title of this video is Preparation for Swing Trading, Step 8. Alright, so if you have already watched Step 1 to Step 7, that's very good, and I would like to thank you for watching this tutorial. How to prepare for swing trading, step 8. This is the last step for a swing trader that does not want to leave anything to chance. All right? One of the problems that many swing traders are facing is the inability to sell in the financial market. All right, so there are some traders, all they do, they just buy. So they like to buy and they only buy. But sometimes one can also sell. So the financial instrument will not go up forever. So if you are implementing bullish trading strategy, bullish swing trading strategy all the time, that's not the best way forward. So the only time that we will apply the bullish trading strategy is when the market itself, talking about the S&P 500 itself, is bullish. All right. So some traders find it very difficult to sell, and sometimes they come into the market is bearish, and they are just buying because they want to trade, and they only look for bullish trading setup. By doing so, they end up losing because they don't know how to sell. All right. Generally, most common traders are bullish market participants. So if you take a sample of swing traders, you may notice that more than 70% of those traders are typical bullish traders. All right. This is normal because the natural progression of the market is up. Financial market go up more than they fall. But there are always financial instruments that are overbought or distressed due to the weak fundamentals. All right. So the financial market is true that is going up more than is falling. So you see that most stock will be bullish most of the time. So more than 70% of the time, the financial market will stay up, and 30% of the time, which is the correction time, will go down. All right, but we need to balance that. Okay, that's what we are talking about here, and it's also a part of the preparation for swing trading, so we can be ready to buy and ready to sell. So sometimes the financial market may be bullish, but it reaches a point where it's now overbought. All right, is it again the right time to buy when a financial instrument is overbought? All right. Moreover, if the market is bearish, it is not reasonable for one to adopt a bullish swing trading strategy. Yes or no? All right. So the market is bearish, or as we have seen 2007 to 2008, the market was bearish. A lot of bullish traders get into trouble, or they were calling all the bearish sellers as evil, all right, that they should ban short selling, they should do this, they should do that. Take it from me, all right. For traders who understand Elliott way, we have the multi-way, and then we have a corrective phase. Correction can even go down to the 70%, 78.6% of the prior trend. So if you are that type of swing trader, that is typical bullish trader, I'm not saying it's wrong to be bullish, or I'm saying that you need to balance it. Or if you are somebody who always like to buy, try to learn when the market is bearish to stay away from the market altogether. Don't try to implement your bullish swing trading strategy at a time when the market is bearish. That's what I'm saying. I'm not saying that you should change your trading style, but if you think that, I hate to sell, I don't like to sell, George, you cannot change me, that's fine. Stay bullish, but When the market is bearish, do not come into the market at that point in time. But as a swing trader, it's better to know when to sell and when to buy, and that will help you. Why? I'll tell you one example now is that suppose you enter a swing trade, all right, a bullish swing trade. Okay, you are typical bullish swing trader. Now you enter the bullish swing trader, you done your homework, your preparation, everything done, you implement a top-down trading method, you cut it like a pro, all right? You feel good about yourself, all right? Now, after 30 minutes, you realize that it was a mistake, all right? You realize that you made a mistake, that you shouldn't buy that stock, which can happen, all right? You realize that you made a typical swing trading mistake, that in fact you should sell the stock. All right? Now you're going to take a loss, yes or no? You're going to take a loss because you make a wrong decision. You're going to take a loss. That's okay. You can cut the loss and go and stay away. But suppose you know also how to sell. This is another opportunity. So a bullish signal that has failed, you are clearly sure that that has failed, that the signal has failed, that bullish signal has failed, or you have made a mistake buying that stock. Well, if you realize that you made a mistake by buying a stock and you are typically sure about it, well, it's an invitation to sell it now, yes or no? So somebody who knows how to buy and sell will definitely turn around and now sell the stock that he was buying at the first place. So I'll leave it to you to think of it. So don't force yourself. If you are typical bullish trader, try to see whether you are able to sell. Learn to sell, all right? Professional sell. Professional, they sell. They know how to sell. And you should learn how to sell in the financial market. So you may be wondering, Joe, what's all this about? It's about preparation for swing trading. And we get into that very shortly. For those reasons, it makes sense to get ready to sell or buy at any time. Be ready to buy or to sell at any time. To do so, one must have 2 watch lists. So for the preparation for swing trading, step 8, which is the last step, very important step for all swing traders. A swing trader that is preparing for swing trading should not only have a bullish watch list. You must have a bullish watch list and a bearish watch list. Why? That's a very good question. The reason is, what usually takes place, all right? You set your mind that the market is going to go up this month. You are just bullish. You are talking about it on Twitter, on Facebook. You are cursing everybody that wants to sell. You dismiss everyone that wants to sell. And you just want to buy, okay? With that mindset, it's a bit of a risk to you because you are not willing at all to sell. You do not want to accept that one should sell. You just want to buy. It's not good. It's not good. That's why sometimes people lose because they believe so much, okay, in their forecast that the market should go up. Why people are selling it? They shouldn't sell it. Those are evil sellers. We should ban short selling. So with that mindset, you are stuck, all right? You remember the goals. You want to buy, the goal to buy. All right, here you are. Everybody must buy. We should destroy everybody else that is trying to sell. They are enemy number 1. But you don't want to do that. You can't do that. People will sell when they want to sell, and they will buy when they want to sell. Okay? So they will buy when they want to buy. So the point I'm making here, by having a dual strategy, am I speaking with my beautiful Texas accent? All right, let me know in the comment section. I need to practice more with my Indian accent, so I'm working on that. So, the point I'm making now, for a swing trader, okay, one should have a bullish watch list and a bearish watch list. So you will check stock data bearish, and you will select high probability bullish trading setup. You have them already, okay? So you come into the mindset, you are neutral. You just say, I want to follow the market. That's because you are swinging the market. So the market swinging down, you don't want to swing it up, isn't it? So market swinging it down, you want to swing it down. All right, in a declining channel. If it's swinging it up, okay, you want to swing it up because you are a swing trader. If it's swinging horizontal, you are a swing trader. You are swinging it horizontally because you are just want to follow the market. Therefore, you must have bullish watch list and a bearish watch list. So You come into the market, though it doesn't dismiss the fact that you may be typically bullish because of many reasons, but you still need to have two watch lists. So as you are expecting to buy, you come into the market. If it's good, everything remain intact, okay, you will buy, okay? But suppose, as you expecting it to be bullish, it turned out to be bearish. There was some crazy economy news in some funny island somewhere far away that nobody ever heard about. And then the market is reacting to it because they say, all right, blah, 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 blah. And everybody jumping all over the place selling. What do? You pull out your bearish watchlist and stop buying. And you implement, so you will concentrate on your bearish candidate. So in a bullish market environment, it's crazy to implement a bearish strategy. Yes or no? So we want to check the market environment. We're talking about step 1, step 2, step 3. Now we are step 8. We know what we are talking about now. That's what we have. Okay, 2 watch lists, all right? So after other preparation that we have already done, now we have the 2 watch lists, okay? So we don't leave anything to chance. We are well prepared and we know exactly what we want to do. Plan A and plan B. All right? The bullish watch list regroups a bullish high probability financial instrument, and the other, which is bearish, is a compilation of bearish stock, currency, commodity, and indices. Quite often, a swing trader may be fixated. Am I speaking with my American accent? Fixated, which means you just want to buy, just want to sell. Okay, fixated. In taking bullish swing trade, and end up losing just because he or she does not know how to sell. It will be better for that swing trader to avoid placing a bullish trade in those circumstances where the bearish traders become dominant in the financial market. This is the case in 2007 to 2008. The bearish traders were the dominant force, and a lot of bullish investors who always like to buy. Nothing wrong with that, but they were buying at the wrong time when the market was corrected itself. Now, take it from me, the market will go up for many years as it's doing now, but at one point there will be a correction. So it's just a cycle. So when one day everybody's selling, or just remember that the stock will become cheap and somebody will buy. A lot of stock became very, very cheap in 2009. People bought stock, very cheap stock that now today went up big time. So this is what to flush out the overbought and oversold and to have a more efficient market. So if somebody has already brainwashed you negatively by telling you that don't learn to sell, I mean, you can quote me and say George said that one should learn to buy and sell. All right? One ought, to bear in mind that the financial market cycle is formed of a trending and corrective phase. So traders that are following us at the 24 Elliott Waves YouTube channel, where I'm busy talking about the Elliott Waves, all right, know that, there is a trending phase, and there is a correction. There is an impulse wave, there is a corrective wave, all right? There are different type of corrections. All right? There is something that we call as X wave when a trending phase has failed. So the financial market, there is a cycle. It will go up. That's what we call the multi-wave. And then it will come down. People are taking profits, the harvest time. So the farmers are not growing all season. Coming October, September, whatever, they will harvest. Same thing is happening in the financial market. So the financial market cycle is formed of a trending phase and a corrective phase. This is the problem that a lot of ordinary investors are facing because they just want to buy and hold. And they are buying and hold anytime and any season. Is wrong. So sometimes when the market is correcting itself, they say, oh, it's going to go back up, it's going to go back up soon. Learn the market cycle. The market may stay bullish for years, but there will be a harvest time when securities surpass more than 5 times their book value. So if you watch the Dragon Den, Mr. O'Leary, all right, or Shark Tank, usually use a parameters of 5 times the book value. All right, so he considered, Mr. O'Leary considered that stock are overbought or companies overbought if the valuation is more than 5 times, its true value. So you can use that. It's true, right? Okay, something that has a value of $50 now is now $300. All right, everything is factored into that already. I'm not saying that every company that is 5 times its true value is overbought, because there are other ways to evaluate a company. So sometimes there are, because of the creation of more value, a company can be more than 5 times its true value. I'm not saying that every time a company is more than 5 times its true value is overbought. You need to be careful. But it's one little factor that people are looking for. So you look at it, you see it's 5 times its true value. Now they are not making any money, and they are not coping with the competition, and the market is now bearish. Do you buy and hold? That is the question. Even during the trending phase, there are minor corrections. So a stock that is going up, doesn't go up like this. All right, it would be nice, isn't it? So it's going up here, you buy here, you take profit here. No. As it's going up, all right, there will be a pullback. So if it's going up and now you buy here, what's going to happen to you? It's pulling back, you lose. And you say, I can't take this anymore. I can't take this anymore. I'm out. So you come out as the price coming to you test the trend line. And start going up. You say, now you see it start going up again. I might as well join them. And now you buy again here. Now you pull back again and you lose. You say, wow, this stock market is rigged. It's all rigged. It's all manipulated. I can't take this anymore. And then you come out here again because you can't take it anymore. And it's going up. And I say, I'll give it one more time. I'll put everything on here, close my eye. I won't come out anymore. I'll stay there for years. Now the correction has begun. You see? So though the price is going up or the stock is bullish, it's not going to go up in straight line. It will be pulling back, pulling back, pulling back. So you may say, Joe, what that got to do with the preparation of swing trading? It's about having 2 watch lists. Bullish watch list and bearish watch list. All right? Without doubt, bullish and bearish swing trading watch lists will help a swing trader to get ready for both bullish and bearish trading opportunity that may arise. So the market is giving us a lot of opportunities. Are you willing to take them? Are you taking only a portion of it? All right? If you can, all right, fly and swim, that would be good, isn't it? Or you can run, swim, and fly. That would be very, very interesting scenario. Somebody drop you from the air, you fly away. Somebody drop you into the water, you swim away. Same thing in the financial market. You want to learn how to sell and how to buy. So this will conclude our series of videos about the preparation for swing trading, step 1 to step 8. To conclude this particular video, all right, my friend, a smart swing trader is the one that has a plan. Your preparation is your plan. You want to build a house, you must have a plan. You want to achieve something great in this life, you must have a plan. A lot of people are wasting time because they do not have any plan. They are wandering around, and other people are using them for their own plan. Have a plan. What do you want to achieve? Okay. As Mr. Warren Buffett has said, this American investor, the first rule is not to lose, but the second rule is not to forget the first rule. All right. So the bottom line of the preparation of swing trading is not to lose. Don't give your money away, all right, without feeling it. Don't do that. Indeed, the preparation for swing trading will assist a swing trader to avoid or minimize swing trading losses. Do you agree? Let us know in the comment section. For a beginner swing trader or those that are still trying to polish their swing trading, it is recommendable that one does not overwhelm oneself by trying to master those steps for the preparation, okay, in one day. So don't try to master, okay, step 1 to 8 in 1 week, in 1 day, in 1 month. Just go gently. Take one, master it. Take a second one, master it. They're all independent. So you may say, all right, I can't master step 5. I move to step 6. Try to go step by step. Don't try to, okay, to take everything in one go. Just try to digest them gently, gently, like the way people eat chocolate. All right, see people eating chocolate, all right? They don't push it straight away in their mouth. They just enjoy it gently, gently, all right? Have I brainwashed you? Good. That's my intention. All right. To make you laugh a bit. I'm not brainwashing anybody, okay? One should try instead, okay, to master them one step at a time without taking too much on, okay, at the same time. Make a decision to apply the swing trading preparation, but my friend, give yourself enough time to achieve that goal. So this is the end of this series of video. I would like to thank all traders for watching step 1 to step 8. Have you watched step 1 to step 8? Now we are friends. Thank you so much, all right? I hope you have learned something for this series of video and will put into use, okay, to improve your swing trading. So you will not become a better swing trader in 1 day. Don't give up, okay? Try to work on it. Make a decision that you want to improve. Anytime you make a small improvement, congratulate yourself, okay? Add a little bit more. If you made a mistake, don't, okay, crucify yourself. Don't blame yourself too much. Be tolerant with yourself, because some people don't forget themselves. They say, oh, how can I make that mistake? Oh, I will never do that again. All right? It's okay to be a little bit emotional, even to cry, but, okay, regroup yourself and then come back again and take it another day, or go away for a few days. All right, and then come back again and take it gently, gently, and work on it gently. If trading is not for you, well, there are other things in life that you can do. All right, life is not all about a swing trading. If you find this video particularly useful to you as a swing trader, let us know. All right, by giving us your beautiful thumbs up. If you dislike it, you say, Joe, you are getting a bit rusty now, and I'm not sure about whether, okay, you have ever swing traded in your life, all right? So mark it down, all right? Mark it down. If you think this is an essential tutorial that can help other swing traders, feel free to share the playlist, because there is a playlist for preparation for swing trading. Share the playlist with your friend so they may watch all the steps. Don't share only one video, just share the playlist, and it is all there, and that person, okay, can start learning also to improve swing trading. You can even embed it in your own website, okay? That will help us and also help other traders to improve, okay, what's going on in the financial market, because other traders can mess up your trade, and you do not want that, okay? You want them to understand what's going on, so we can all tango together, all right? So this is the end of this series of video, and until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about preparation for swing trading, step 8, end of this series of video about the preparation for swing trading, step 1 to 8. Happy trading to you all, and I will speak to you very soon. Oh, c'est bon. C'est bon.